Okay, yesterday we configured company code, company controlling area, chart of accounts, fiscal year, period, posting period variant, and what else? Fiscal year, posting period, field status variants. Now, next step is Fin SC Ledger. Okay, leading ledger, company code settings, enter PAP9. Okay, now we have 30 as well. This was first not populated. Now it is coming from controlling area. Next step, SPRO. Okay, SPRO and financial accounting. Global settings, ledgers, integration of controlling with financial accounting. Define ledger for CO version, very important. New entries, PAP9 version 00L. Okay, now version 0, we'll explain this later on. Okay, next step. Controlling, general controlling organization. Maintain versions. We've already maintained the versions. Maintain number ranges for controlling documents. Okay, AP9, change groups. Okay, now create group, EAP9, 09, 099, 09. Okay, now this is the numbering range group that we are making. We'll save it. Now, why we are making? Because once we start creating controlling documents from controlling area. We will be generating document numbers, and these document numbers will start from 0, 9, or any number range we can assign. Okay, next is RKU. Now, what is RKU? One, repost cost. Now, if you see repost cost, we will be posting cost from FI to CO, and these number ranges will be generated. Assign element group, PAP 9, RKU, RKU2, repost revenue. We will also post revenues to costing to controlling area. RKU3, repost controlling line items. Now, costing line items or controlling line items, from cost center to cost center, these are the transactions that will be taken care of by this transaction. Assign element to group. So if we scroll down, so we have assigned 4 transactions that will take care of the controlling documents, and it will assign if any transaction goes through these transactions, it will be assigned 0, 9 number range. Okay, save. Changes have been saved. Okay, SPRO. Financial accounting. Global settings. Ledgers. Integration. Define document type for controlling, and document type mapping variants for business transactions. Now, business transactions we have already seen for CO, that is RKU 1, 2, and 3, and coin in the previous step. We'll select 0, 1 standard. Now, these are the transactions. Okay. These are transactions run in controlling: manual cost allocation, down payments, distribution of primary cost. So the document number that will be given through that document type will have the type CO, cross company code document, or cross controlling document will be CC. Okay. Okay. Now, let me just configure this. Then I will tell you what are controlling documents. Company code, new entries, PAP 9, valid from 0, 1, default ledger group 0L. And the document type variant for controlling 0, 1. In the last step, we've seen that, which had transactions, controlling area transactions. Okay, so we are aligning ledger, company code, and controlling area documents together. Okay, now this is done. Now let's go and see what are controlling documents and how do these controlling documents look like. AC DOCA, this is a table. Now this transaction is for working on tables. This is ABAP dictionary. This is your main table where all finance and controlling transactions are reflected. Okay. Now, more environment, browser, data browser, table contents. Okay. Over here, We'll use SAP 9 now. This is a populated company code. Okay, it has transactions, so I will execute. Now, if you look at this Bellner, this is document number. Okay, and over here, if you see, we have 9 range documents as well. Okay, I'll double click this RKU3. If you look at this is the transaction we just signed. Okay, this is the document number from finance, and from controlling, it will have its own document number. Okay, and this is the account that was used, profit center, cost center. This is the transaction amount. This is the segment, the passenger vehicle. Okay. So in this AC Doka table, we have all the transactions of the whole company code. Okay. You see 9 series is being used over here. Okay. And these are the different transactions from CO. So it's pretty much well connected. Okay. Okay. Now, next step. I hope this is clear. SPRO. Controlling. Profit center. Profit center accounting. Basic settings. Set controlling area. That will be PAP9. Okay. Controlling area settings. Maintain controlling area settings. We don't have dummy profit center right now. So what we'll do, PAP9. Profit center local currency type will be 30. That is controlling area currency, group currency. This will be USD. We have 3 kinds of legal valuation: legal, group, and profit center valuation. Legal valuation is symbolized with the number 0. This is the 0. Okay. Group valuation is 1. Okay. And profit center valuation is 2. For example, no, we can't actually show it over here. Otherwise, I would have shown it to you. We'll activate it for the year 2004. Save. And this will be saved. This was saved. Okay. Next step, we create a master data of profit center, which is the dummy profit center. But first, let's define standard hierarchy. PAP to buy. Profit center hierarchy. Okay. Okay, let's save it. Dummy profit center. Create dummy profit center. Why do we create dummy profit center? I'll let you. Basic data. PAP9 dummy. PAP9 dummy. Profit center group. PAP9 segment. This is where your question is answered. Why do we need, where was segment used? Now, segment is passenger vehicle, SUV. Some profit centers will have these segments and some will actually go empty of these segments because these are reporting profit centers or cost transferring profit centers. For example, let me just explain. We have segments, and under segments, we have uh, passenger vehicles and SUVs. And under passenger vehicles, we'll have, let's say, profit center Chicago, profit center Dubai, profit center Kuwait City, like this. Now, these are our showrooms for our passenger vehicles. And we want to see what is our profitability per profit center. And same goes for SUV as well. Okay. So that's why we use segments. And segments basically are superlative profit centers. So we have made a dummy. So why did we make a dummy then? Dummy profit centers. Now, some profit centers will have cost centers reporting to it. For example, in Chicago, profit center will have cost centers for uh, admin, sales, marketing, um, even production if production is happening in Chicago. Okay. We'll have cost centers, for example, research or quality or CRM for customers, right? Okay, or even purchasing. Okay. Now these cost centers will actually get reflected in the profit centers. So at the profit center level, reporting will have both income versus costs, expenses at this level. So we can actually have an internal profit and loss statement at the profit center level, even at the segment level. Okay. But some cost centers are just collectors that don't need any profit centers. Okay. And for that, cost centers that go empty without a profit center are automatically assigned a dummy profit center. Okay. That is the reason that we have to assign, that we have to make a dummy profit center, save. Okay. Now this will standard hierarchy. If you go and see, we have a dummy already assigned now after we made it. Okay. And if you go in basic settings, controlling area settings, now we have automatically the profit center, which is a dummy. Okay. Activate direct posting set control parameters for actual data. New entries 2024 line items online transfer, which means controlling or costing line items will be real time. It will be line items, not bulk or not totals. It was saved. Okay. Plan versions, maintain plan versions. Now these plan versions are planning data collection. So we have 0 version, version 1, 2, and 3, and much more. We can have our own custom versions as well, where we can actually plan costs for the year, for the quarters. Version 0 actually captures plan and both actual. So plan values or plan costing for production is captured, okay, in AC Doka table. even actual values, so we can compare it and calculate variance. So what actually was costed and what was planned, the variance between that, for example, the cost of producing a car, a passenger vehicle, okay, was somewhere around 10,000. That was planned, but in actual, it came out to be 12,000. So the variance is 2,000. So you have a variance, and you can then investigate why this variance was caused, either because the raw material was expensive, or the overheads were overspent, or there was scrap of material. Then we have versions. This version purely captures plan values, and this also captures plan values. Then we have 900 and 909. We can have our own as well, like 800, 808. Why? Version 800, for example, will be best forecast, best use case, or best case scenario, or a version 808 will be worst case scenario, just to forecast the most pessimistic side of the business, the most optimistic, and the normal. Okay, the normal. Okay, so 0 is our main version. Controlling area settings. This is legal valuation. It captures actual and plan. Okay. Settings for each fiscal year. 2004 integrated planning. Okay. And I will double click this. Yes. LP01 now. Enter.
LP01 सर ये किस चीज का?
This is for automatic printer, default printer. Okay. SPRO. When you don't have any printer, so you give LP01. This is default setting by SAP. Okay. Now, versions have been created. Now let's go back and create some more. Profit center accounting, master data, profit center, define profit center, P1001, PAP9, master data. Okay, now dates are very important, otherwise it will just not, it will just conflict. Plant 1 and 2, plant PAP1 and PAP2. Gym profit center group will be the same hierarchy, standard hierarchy. Okay, and the segment. Now the segment here is PAP. Where is it? We created one. PAP. Okay, passenger vehicles and PPV. Activate. It was activated. Okay. Create profit center. P102, P1001. We will copy the details, master data. 3. Now, this will have not passenger vehicles, but will have SUVs. PPV and SUVs. Okay, both will be activated and both are activated. Okay, okay. Now, this is done. Next
Yes,
is
sir.
global settings, ledgers, fields, field status, the one that we assigned, PAP9, it's 01. Okay, we don't want this right now. We'll have our own defined field status variants. As PAP9, copy all. Okay, okay, PAP9 now will be assigned to PAP9 company code. PAP9, now we'll work on this field status groups, field status variants. PAP9, select field status groups, G04 cost accounts, copy as G002 cost accounts, required, enter, double click, additional account assignment, cost center is now required entry, save, enter. Okay. Now, general ledger accounting, master data, GL accounts, preparations. We've already defined the account group, retained earnings account, and PAP9, 100, 100. This will be our balance carried forward account. It gives a warning in orange, just press enter and it will go away. So this is a symbol. If you have more than one company codes, then of course, and if the chart of accounts is used at multiple places, more company codes will have. For example, if you're using X over here, we'll use B, A, R, T, anything, any alphabet, and that will be used in that company code because multiple company codes can use chart of accounts. So group chart of accounts will actually have more than one P&L statement. Save and save. Okay. Okay. Now we'll go to FS 00 This is our front end, and we'll create ZAP 9. Now, in ZAP 9, we will have retained earnings account. Double click it, and we have all the details. But our company code is uh, PAP9. So we'll just copy this. I'm just trying to save time. 100, 100, PAP9, continue, and it actually collects and and replicates all the data, balance sheet account, liabilities, retained earnings, control data. Account currency will be AED. Sort key will be 01. We'll discuss open item management later on what that is. Bank, create bank interest G01. This is the field status group that we were working on. Okay. Save. This is your first account that has been made. Okay. Now we have expenses. Expenses, salary account, and we will PAP9 400, 500, and this is primary cost and revenue salary account. For PAP9 control data, this is AED tax category. It is not a recon account, but for controlling side, in finance side, when we have a GL account, we have a parallel mirror copy as cost element. It's not called GL in control, it's called cost element. That cost element is of category 01, which is primary cost. And we have categories like primary, which is parallel of GL. Then we have revenue collecting cost element, sales deduction, external settlement, and other categories. But we'll see that later on. Create bank and interest G02, the one that we created, cost accounts are required. Okay, save. Now, same we'll do with rent account, PAP9. It is copied, save. This is created. Okay. Now, relevant to cash flow, we create a cash account as well. And cash account, PAP9. This will be relevant to cash flow, G01, and we'll save it. This is also saved. And next step is, oh, I forgot to show you accounting, financial accounting, general ledger, master data, GL accounts, individual processing centrally. So if we just look at, okay, now this is what we have actually created, cash account, expenses, and liabilities, retained earnings account. Okay, if I double click, so everything is made now. Okay, now next step is controlling, cost center counting, master data, cost center, individual KS01. Okay, now over here we'll create P100101 is the validity start, master data. Okay, now this is vehicle body shop for paint, for finishing, and stuff like that. Gym category. Okay, allocation cost center, service cost center, but this is production cost center. Okay. Hierarchy area. Okay, PAP9 is the hierarchy we set at the first level that was yesterday. And P01 is the profit center, plant 1 and 2, under segment passenger vehicles. Save. Come on. Okay, let's stop over here now.